So I just had some clients of mine that after seeing a house said, look, we'd like to look at something that's a little higher priced. So I said to them, why don't you come back tomorrow? Because guess what? This home is going to be priced more. And it's all too true. It's Kiwi the Coast, your luxury real estate specialist, helping you maximize and sell the value of your coastal home. And today we're going to dig deep and find out why this market is so crazy. Why is there so little inventory, and why is there such buyer demand? Hang on to your socks, we're going to dig into the data. So to understand this extreme seller's market, we got to look at a bit of history. In fact, we got to look 15 years back to where it all began. 2007, there were over 17,750 homes on the market available for buyers to purchase. What is it now? It has dropped so severely. Guess what? It's little over 950, and that low inventory is what is driving this market. But let's look at the data. Now, prices have nearly doubled from 2012 to today, if you look at the chart, and the average monthly inventory levels are at a 15-year extreme plus low. So the accumulative days on market is also the lowest it's been in 15 years. So it begs the question, where are we now in all price ranges in Orange County? Well, if we look, first of all, pendings are following the inventory increase. Inventory is driving the market, and pendings are still higher than the active inventory. Now you'd say to yourself, well, that doesn't make sense. How can there be more sales than there's actually inventory on the market? Well, that's got to be all those pocket listings and off markets. So with more closings than listings, this leaves a lot of room for underpricing the homes. So I'm saying to all my sellers out there, don't sell privately. Make sure you put your home on the market so you can truly experience this market and maximize the net in your pocket after a sale by exposing it to the full market. So let's dive into the data for all the price points in Orange County. First thing to understand is that inventory is down by 52.5%, and the cumulative days on market have dropped substantially from 31 days to 19. Now, the approximate price per square foot has gone from $521 to $658 per square foot, and this is in a year of time. So this means that your 2,000 square foot home is worth about $274,000 more. So literally, you just made an extra $274,000 by staying at home for a year. So a year ago, there was 1,794 homes on the market. Today, a year later, 819. So you can see that the lack of inventory is really driving the market. But if you look at the sales a year ago, over 2,200 sales, and of course now over 1,600. So the sales are outpacing the inventory, which is further exacerbating the supply and putting extra pressure on prices. So the points to understand about the homes that are under 2 million, inventory, of course, down by 54.3%. The cumulative days on market dropped from 27 to 17, so that's tight. And the approximate price per square foot has gone from $460 to $550. So again, this means that that 2,000 square foot home under 1 million is worth $192,000 more. So all you folks out there, got $1 million home, you stay there for a year, it's worth another $192,000. How could you possibly save that much? So let's look at the 2 million plus market, shall we? The 2 million plus market inventory is higher than the pendings and solds. Okay, that makes sense. There's more inventory than that's actually transacting or closing. So that's slightly good, but it's still way less than last year. And of course, the pendings did jump in January like they did a year ago. And of course, a year ago, the homes available in this price range over 2 million was 718. It's way down below 400 today. The solds have increased slightly today. A year ago, 156, now they're over 200. But of course, when you've got lower inventory and more sales, again, the squeeze on the inventory is huge. Not as high as it is below 2, but still very significant over 2 million. So the data, let's look at that over 2 million. Well, inventory down by 47.8%. You can see that on the chart. And the approximate price per square foot has gone from 900 a foot to 1,017. So this means that your 3,000 square foot home is about $351,000 more. Now, the sold to original list price has gone from 94% to 97%, and that's because we've also got a lot of homes in this price range selling over asking. Has raised that ratio, but this appears to reflect buyers getting pushed up into that $2 million price range or more because they've sold their home less than 2 and now they're buyers over 2, and this is creating more activity in the higher end. So what does all this mean? Okay, here are the takeaways. So inventory would need to increase to the 2018 levels for there to be what we call a balanced or neutral market, buyers and sellers about equal. But to do that, the inventory levels would have to increase 6-fold, 6 times. Is that likely? I don't think so. And so, of course, we're not going to see that huge increase in inventory. Even if it doubled, it's still not going to stifle those prices out there, at least in the near term. But again, there just isn't enough homes on the market for sale right now. Now, the luxury market is becoming more and more buoyant, and we're seeing this because the buyers in the lower markets have been selling and they're getting pushed up into the higher price points. That being said, current events could still create some pause just simply out of fear. So that's a wrap on the overall market. We've seen what's happened in the last 15 years and of course year to year in those 2 different price ranges. Don't forget to subscribe to my channel so I can keep you up to date on all the changes affecting you and the real estate market. See you on the next video. Varum.